Good morning, my friends. This is Hilgard Lamprecht here again. Great to be with you. And we are doing our weekly updates now on Facebook. It will happen every Monday at 12:30 p.m. With a lot of continued volatility ahead this year, we find it important to make this change so we can keep up to date. The replay will still be available to watch on Facebook or in our Friday email if you missed it live. If you'd like to watch it and share the link with other friends or family members, you can certainly hit this button called Start Watch Party, and then others could watch it with you as well. So what have we seen in the last few days in the markets? So after a very short week of working towards finding a deal, the Senate is no closer to a second round of stimulus. They all went home on break. We so hoped they could do this before they go on break, but I believe they are on break for a month. The uncertainty did nothing to rock the markets, which is kind of interesting. Last week, the market just remained relatively flat. You would think that it would make a bigger impact. It gives us a good indication of how the markets are positioned at the moment. They are stronger than what we anticipate. Weekly unemployment filings dipped under 1 million, with Thursday's reporting for the first time in 21 weeks. So it's making progress. Our economy is kind of coming back. People are going back to work. We're seeing the unemployment rate coming down and down. So remember when we said back in March that in an interview, Warren Buffett said, don't bet against the U.S. Hindsight being what it is since, hitting a low on March 23rd, the S&P 500 has risen almost 50%. More than 40 out of the 500 have doubled their stock value in that time. What I'm saying, folks, is the market's down was about minus 30% in the S&P, and we are back. We are back beyond that dip. Why is that important to know about right now? Just so I put it for you in different terms, if we look at this, the dip in March 23rd translated into a $12 trillion of value decline. So if you sold at that point, you didn't get back into the markets during this period of time, you would have lost out and lost out big. So I know some of you have grown concerned with the election cycle. We feels like we're still in COVID. To be frank, we maybe feel a little bit more optimistic in that we are moving through it. I'm looking a lot at the amount of deaths. I can see that reduced substantially, and although the markets are looking at that more so than the new COVID cases. So great amounts of advancements, right? We're learning about how to treat this disease. We also have some positive news ahead of when inoculations are coming and where they are in the approval process. There's two specific inoculations that are getting close to be able to be released. I think as early as late September, beginning of October. So we have hope. People are going back to work. Markets are strong. But now we're going through the next big turmoil, right? Which is the election season is on us. 4 months before end of this election season. And in this period of time, a lot of noise going on, a lot of up and down. Some clients are concerned. Here's what I want to warn against. I want to warn against getting out of the markets completely and then trying to sit on the sidelines and hoping to make a decision to invest after the election. For some folks, you just can't sleep at night. If you do, feel free to please give us a call. Let's have a discussion. But there are a lot of other different strategies you could utilize to reduce risk. And if you feel a lot of risk at this point in time, you should give us a call and let's have this discussion. But this is what we're doing to manage this risk at this point in time. We've done it through the COVID season very, very successfully. We are looking for proactive ways where we're using different types of money managers that we could utilize to be able to navigate through this ebb and flow. At the same time, if we move monies out of the markets, we want to be very, very smart about when we transition money back. But more so, we want to encourage you to go through this volatility and fluctuations. And this week, later this week, I'm coming out with very, very strong reports. Like here's an example of it. It's the report that you'll be seeing in our marketing efforts. It's a great report to summarize for you what's happening in the stock market during election time. I'm researching a lot on the impact of whether a Democrat or Republican takes office. What's the impact of the markets? And I'm seeing that the type of person that gets elected or re-elected has very little to do with the stock market's returns. No, that's not something you want to hear, but it is the truth when you look back at every single election in the past. But when you're comfortable where we are, give us a call. There are places where we can get guaranteed returns for you, 2.5% for 3 years in a guaranteed account. If you just feel like for some monies you'd like to find guarantees. We've been helping a lot of our clients to find investment vehicles that provide downside protection at the same time still giving upside potential. It seems like that to be a really, really good alternative from just simply moving to cash. So it's a good time to look and review your investment portfolio. Give us a call and let us have a discussion about that. I'm excited about letting you know that we are back to live events where we're doing interactive dinners with our clients this week, actually on Tuesday and Thursday. We have a workshop down here at Ocean Prime, very close to my office. They have a phenomenal menu. Both evenings is sold out, but we are creating a third evening, which is the following week, in which you are very, very welcome to come, bring a guest, and let us introduce ourselves and talk about the unique approaches that we are utilizing that has given the majority of our clients, I'd say probably 98% of our clients, a lot of comfort and not making any changes and benefiting in a big way to staying invested and reducing risk. We have a unique way in how we are layering the money in such a way that low risk money is in low risk accounts, high risk money is in accounts that typically we have much more time for you to work out through this volatility. So I'll be sharing some concepts around that. Also, we're talking a lot about tax savings. Now we can be proactive with our tax planning for the remaining part of this year. So we look forward to being with you. If next week is not a good time, feel free to reach out to Susan. We still are having events at Bala Kalina for the Tuscan Experience, where you are also very welcome to join Denise and I and bring a guest, and we'll do it in a more intimate setting and sharing how we can help. So look forward to being with you again next week this time. You know our phone number is 407-299-4129, and speak with Susan to either schedule a time to review your positions if you feel uncomfortable, or if you'd like to schedule yourself and a guest to visit with us during our live events. Thank you very much. Great to be with you. Have a great week and be safe. And